Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday morning market webcast. All right, I am back in very cold New Jersey. I traded that for rainy and then sunny Southern California. It was a fantastic trip. I'm back. It's 14, -3 with the wind chill. Whatever. Let's trade. So we had very good days. I traded from California. We traded in the room. We had very good days Thursday, Friday. 38.5 Thursday, 17 Friday. I was flying, etc. yesterday, so we took the holiday as a holiday. So we got a short week this week. The thing I want to emphasize here on the continuation chart is the 100-day exponential moving average. It's coming in, on the continuation right in around 20, call it 2680. Resistance on Friday. They weren't able to take it over the top in a shortened, Globex, no regular session, nobody gives a crap thing yesterday, which is interesting to me because those are usually the ones where the bulls, when they're in a position of real, power, can really take it up over the top and do some damage when nobody's looking. That didn't happen yesterday. So we're off about 2/3% right now. We traded as low as 49. We're trading around 54 and change right now. So for me, can they take out the yellow line on the continuation chart? I don't know. If you're looking front month, then the 100-day is right in and around, call it 2684. So 80 to 84 for me is the next hurdle. If you get up over the top of that, then you're looking at the purple line. You're looking at the 200-day. You're looking at testing from underneath a moving average that we traded over for 95% of the time over the course of basically the last decade. And I think that on the first big break of that level, heading back up to test that level from underneath is a very reasonable thing. Anybody who's been watching me for any period of time in the last week or so, that's not news to you, okay? Until then, I think we're in buy dips mode. We've been buying dips. We've been making a heck of a lot more money on the upside than we have on the downside. So 2,700 on the continuation chart for the 200-day exponential, 2,733 on the front month. So it's a wider band of price. You're talking about a longer-term time frame, then you're talking about a wider band of price. On the hourly, look, we have been taking stairs up. The new weekly pivot is 2640.67. If what this is a move back to test the weekly pivot, then this is a battle that each side really needs to win as we head into today and the last 3 days of the week. Bulls want to hold it and establish it as support. Why? Because if you can do that early in the week, like they did last week, it might be a little sloppy for a couple of days, but you will get the directional move higher. Okay? What do the bears want to do? They want to break it. They want to convert it. They want the opposite. They want the opposite. They want to try to get back towards 2,600. Ultimately, though, the bears have not broken this tape until they take out the monthly pivot. And you say, well, Mike, we're trading like 2670, 2650. That's way down at 2548. Well, it is what it is. I mean, we were trading 2316. So asking them to go back and convert what is now essentially the daily mid-band, which is coming in about 43. By the time price got there, it would certainly get up to 48 at least. You have to convert the daily mid-band if you want the tape back, bears. If you don't, if you can't, then you're not getting the tape back. And we'll do the buy dips thing until we're done doing the buy dips thing. This is a very dangerous tape to get ideologically convicted in either direction. If you've been ideologically convicted that this has gone up enough, it can't go up anymore, what's going on, this is ridiculous, then two things have happened. You probably missed the upside, or most of it, and you probably lost money fighting price. Don't do that. Don't fight price. Market wants to go up, be long. Market doesn't want to go up, then be short. I know it sounds easy, but when you kind of free your brain from all the thinking and you concentrate on the 5 or 10 handles in front of you, that's what you're able to do. And that's what we do and have done for on a consistent basis in our room for days, weeks, months, and many, many years. We're, as we head into the fourth week of trading for January, we're in month protection mode. We're over 200 on the month, and we're going to take advantage of everything that we see, but at the same time, we're going to start to get more selective about setups because the month was booked a long time ago. So the key here is you get a big pullback this week, it's still high noon, it's still the daily mid band. We've yet to deal with the upper band. Lower band, middle band, we're not there yet. Where's the upper band on the continuation chart? It's messing around with the 200-day. So today, tomorrow morning are going to be key. I think it's going to be choppy this morning. I think it's going to be really choppy and whippy this morning. There's a lot for them to fight over, especially in the area of 56, and they're going to have to deal with it. Okay, that's all I've got for now. At 9:20 a.m., I'm going live on Instagram to give my pre-opening talk to subscribers. Come check it out. It's more of this, and we'll set up the opening of the day. If you want this all day long, then come on in. We'd love to meet you. You're going to love what you see. If you trade this stuff, you will have found a home. All right, everybody, take care. Trade them well. Bunch of stuff out on social. Check it out. Talk to you soon. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.